we're about to move into 2 months where volatility tends to pick up a bit. Again, August to September, as we've talked about, I've warned before, tend to be weaker months. And that's just at least something worth paying attention to. And that will kind of bring us right to where we want to be this morning to talk about what you need to know before the bell. Markets, as I said, have had a very long stretch with very minimal movement. This has been a very quiet move higher, right? There's, the ups and downs every day are very mild. We don't have big drawdown days, the advances days, or up half a point or whatever. Very quiet advances. Now, below the surface, there's been some really strong gains. But overall for the index, it's been a very, very quiet, what we call low volatility advance here. Volatility has been declining. But two things to really kind of pay attention to. One, the market has been above the 20-day moving average now for one of the longest stretches in history, going back to 1965. Now, that doesn't mean anything. It just means that the market's been in a very bullish advance for a very long time. Typically, the market does not trade above the 20-day moving average for very long periods. That's kind of a short-term correction point. Markets, rally a bit, 10, 20, 50 days, pull back, those type of things. But when you get very, very long, and that's what this has been, is basically a 68-day advance now above the 20-day moving average, that's just very extended. At the same time now, we have money flows beginning to decline here. Again, sign of exhaustion. This market's been very bullish here for a while, advancing every day. It's been very good. Everybody's very excited. Sentiment is very bullish. Positioning is very bullish. We see a lot. We've talked about recent excesses and speculation in the markets, and that's because the market's just been grinding higher, right? It's a no-lose market. I throw money in the market, it just makes me money. So again, everybody's very excited here. So again, that's fine, but you're starting to see some signs of exhaustion. And typically when you see signs of exhaustion like this, you at least get a short-term pullback, or at least kind of a consolidation period in the market. So again, kind of watch these periods. Last time we had a significant drawdown in kind of money flows was back going into March, and then of course, April was the Liberation Day thing, but markets were already declining prior to the tariff announcements. Then we saw a pullback here in monetary flows, in money flows back in late June. The market just kind of pulled off a little bit, was a lot, tested the 20-day moving average, took off from there. So again, that this declining of money flows doesn't mean anything other than the markets are likely getting set up for some type of a correction. And it's particularly the case when you have relative strength and momentum as elevated as they are right now. So again, there's just, as we talked about before, the risk of a correction are starting to build here. The problem that I, a little bit concerned about as always is I'm starting to hear a lot of people talking about the same thing. And of course, markets tend to do the opposite of what everybody thinks. So kind of everybody's talking about a correction and kind of August, September right now. But that doesn't mean it has to happen. The odds are building that we will have some type of a pullback in the market, just very extended, very long, very, very complacent. You're going to have a pullback. Timing's always going to be the issue. But doesn't mean it has to happen. I mean, I've seen stranger things in recent history even where markets just stay elevated for quite some time, kind of keep that grinding higher. Eventually they do give way. But right now there's a lot of momentum, a lot of bullish bias here that's keeping asset prices elevated, at least for now. So again, go ahead and remain allocated to markets. But again, practice that portfolio management structure, right? Take some profits, rebalance risk as needed. Holding a little bit of extra cash here would certainly not hurt you very much, but would certainly give you an opportunity to buy some things that do pull back on a short-term basis. Outside of that, the rest of the market continues to do okay. Kind of watching the dollar. This is kind of a key for a lot of things, but the dollar's been really basing here, starting to try to turn up here as well. So if we start to get a very strong rally in the dollar, that's going to have some impacts on other assets as well. So keep a watch on the dollar here. It's very oversold, trying to form a base. And if we do start getting a stronger rally in the dollar later this summer, that could have impact on commodities and a lot of other things that are dollar related. So it's at least worth keeping a very close eye on that. That's what you need to know before the bell this morning.